recession is coming.
Recession is coming.
Whether it's today, next week, next month, next year, or even in 5 years. Recessions are inevitable, and they're a completely normal part of the stock market cycle. In fact, what if I told you since 1948 there's been 12 in the US alone? A recession is just the period between a peak of economic activity and the trough that follows, where there's a significant decline in activity spread across the economy that can last from a few months to more than a year. If you've just started investing, then a recession and a stock market crash can be pretty damn scary. It's nerve-wracking and can leave you feeling like this. The most anxiety relieving thing I can tell you is actually stocks going down is good, and that's where you want to buy more to maximize those returns, which is all good and well. But what can you buy today that could be recession proof and give you a sense of security that your investment portfolio isn't going to be wiped out? So let's talk about what makes our perfect recession proof company and what we're looking for. And you can use this to test some companies that you've got your eye on. Now, of course, there's more factors, but here are the most important ones that I look out for. And if you're new around here, make sure you like and subscribe to follow my investment journey right up to 1 million, which I'm sharing right here on this channel. So let's dive in. The first question we need to ask ourselves is about resilience. Because with all the turmoil that comes with the stock market crash or recession, we're going to need it. First, we want to know, is the company long established? It's much safer to assume that a company that's been around 50 years will fare a lot better than one that's in its infancy. Secondly, a really good factor to look at is, have they survived a stock market crash before? Of course, there's no guarantee that means they'll survive it a second time, but it shows they know what hardship looks like and they've overcome it. Now, the most important thing when it comes to these recession-proof stocks is a question right here. Is your company a want or a need? And by this, I mean when things get tough and people are struggling for money, is your company or service still a must-have? Is it something that they can cut down on that they don't need? Now, generally, whether you need a new car is debatable, but generally, things that people can do without will fare worse, as they are the easiest things to not buy or just cancel. There's a couple of exceptions to this though. Alcohol and tobacco and the adult industry tend to do incredibly well in times of trouble. No surprise as you can guess what people turn to when they're feeling down. A perfect example of this, which I read recently, was given by Terry Smith in his book Investing for Growth, where he said, pet food is typical of the sort of product we seek to invest in. No credit is required to buy it, the consumer has no opportunity to bargain on the price the supermarket displays is the price you pay. Consumers are typically brand loyal, and once it's been consumed, there must be a replenishment purchase. Research clearly shows that if times are hard, people will cut down on food for themselves or even their children rather than cut down on their pets' food. So once we've confirmed the company is a need, there's also some other factors to consider. Their level of debt, do they have a good management team, or are there any specific issues relating to that company? I always double check my companies on Simply Wall Street before I invest in them because I think it's a really nice and easy visual way to see the data, and it'll highlight any red flags. The thing you do need to be aware of though, which is very important, is this: the trigger. When a recession happens, it will usually follow a trigger that sets it off, and this decides how a business or industry will perform during that recession. In the Great Recession of 2008, it was triggered by a housing meltdown, so real estate companies didn't perform well in the following years, but eventually they did bounce back. I do have to give a disclaimer here that there is no guarantee that a company is truly recession proof, as when the market crashes, everyone will feel it to some extent. But what we're looking for here is companies that are needs, that are in good financial health, that will fare a lot better in a recession than others. So let's take a look at some of those companies. Let's start with my favorite topic, food. In the 2008 crash, the S&P 500 dropped a whopping 37%, but you might be surprised to know that Walmart made an 18% return that year, and that's because the growing demand for food doesn't change. Even when there's a recession, people still gotta eat. So the question is, could they do the same this recession? Despite this recession likely being triggered by something differently, more likely gas prices, it still doesn't mean it won't do well. Technically, the US is already in a recession, if we go by that textbook definition of 2 quarters of negative growth. So with the US in a recession, they are actually on the way up. In the UK, however, we've got the smaller counterpart Asda, or my favourite with a 26.9% share of the market, Tesco. I do really like Tesco as a company because of their ability to adapt, adding discount sections to their store and implementing new ideas. But I have to admit, in this case though, I'd be tempted with something more like AB Foods. They produce food that's in a variety of different stores, as I do think the majority of customers would be lining up for the German discounters Aldi and Lidl much quicker. I think if you could invest in Aldi, it would be a no-brainer right now. On the other side of this though, a discount consumer you can invest in is B B and M, bargains. Everyone loves a bargain. I think they'll be in a strong position as people still want their big name brands without paying the full price. So I can see them definitely having an uplift in sales. The only downside though is they obviously face the same transport issues as other companies, and fuel prices which will play a part and put pressure on their costs. But if you think them same costs will apply to everyone, then discount stores should definitely be a bargain, because they may be able to counteract some of that increased costs with more sales. Another industry that could do well in a recession is healthcare. Even when times are tough, it's important to look after our health. For this, companies like GlaxoSmithKline with its medicines, and Unilever with its big brand names like Tresemme, Dove and Persil, just to name a few. Both could be attractive options, big brands that have been around for a long time that people buy regularly. And to give you a slightly different idea on the healthcare front, you could look at a real estate investment trust like Primary Health Properties. It buys healthcare related properties and lets them out to GPs and other medical professionals. They've currently got more than 523 properties on its books, and a whopping 99.7 are occupied. A recession won't change that anytime soon. On top of that, the company also pays a chunky 4.5% dividend. Speaking of hefty dividends, the next sector I want to mention is tobacco and alcohol. When times are hard, people will rarely buy less alcohol, as it's mostly a small portion of their income and brings them happiness. Or in tobacco's case, sadly, in stressful times, people are more likely to start smoking. Tobacco is more of a controversial one in my opinion, but we can't ignore its existence. If you're comfortable investing in those, British American Tobacco with its 6.3% dividend and Imperial Brands with its whopping 8.4% dividend are good options. In terms of alcohol, my favourite company has to be Diageo, one of the largest businesses in the world and the UK's largest alcohol producer. They've got popular brands like Guinness, a range of whiskey companies, plus Smirnoff, Baileys and Tanqueray. I don't see those brands going anywhere anytime soon. The company has been able to coax steady growth for years. They're highly profitable with a profit margin upwards of 30% per year historically. I'd consider these a top dividend stock to consider if you're looking for that dividend income. Other industries that you can consider are your staples that people need. Things like your utilities, National Grid being a good option, but there's something I do think you have to consider with these, and that is they may be temporarily overinflated because of the economic climate. Gas prices are ridiculously high thanks to the war in Ukraine, which can affect them in the short term, which may have their share price higher than it should be. A couple of other industries to mention which I feel may be in similar situations are funeral services. Seems good in principle, something that we'll always need, but there's been a huge spike thanks to coronavirus. Similarly, DIY stocks may seem a great purchase. People will be trying to save money by doing things themselves, but they've also had a huge spike in lockdown and did crazy well, coupled with the fact that DIY companies are likely also having to deal with the price of fuel.
Oh, good grief, that's high. Quite high, rather high, so very, very high.
Of course, it's not guaranteed that these stocks, like any stocks, will move either way, but just be careful that they could be riding a wave that will come crashing back down. You need to take a look at each stock in more detail. Simply Wall Street's a good starting point for checking out these companies. I've managed to get a link down below that will give you guys a free trial if you want to check that out. The key takeaway from this video is that some stocks will perform better, but it will heavily depend on what the catalyst for the current crash is. The main thing that you've got to think about is what point in your journey you're at. If you're in the early stages and you have time, that's fine. You can ride the wave, continue to buy stocks and ETFs at a bargain price, which will make you nice profits in the long term. The trouble comes, however, when you don't have time. Immediately, you might think this applies to people looking to retire. Well, yes, but it can also apply to people who may not have thought about it. Say you've got some funds in your lifetime ISA and you're ready to use it for a house deposit, or money in stocks that you're using towards a wedding or a big purchase. If that is your position and you're heading into the next recession or crash with defensive stocks that pay a strong dividend and represent good value for money, then you could be onto a winner. I know certainly with some of my stocks, I've fared way better because they aren't as susceptible to big swings in the market, in particular the tech industry. I hope that's given you a different perspective on what's possible, and before you do buy, make sure you check out this video as it's something you really need to be aware of before you buy anything else.